I need a clicker though. I didn't get that on the way by. Oh, here it comes. Jeremy, thanks, man. All right, so a tall ask to provide exactly an approach to build a modern or a next generation data ecosystem. So I'm hopeful. So at General Bank, I guess I should start with. Here we go. So currently I'm at General Bank. I'm the Director of Data Engineering and Advanced Analytics. General Bank, though, is very early in our data journey. We're only, as a bank, we're about 20 years old, so we're quite early days. So I'm going to spend most of the time here talking about my previous experiences and some of the ways we've implemented data environments and data ecosystems there. So those are primarily with credit unions, based, right around that between 4 and 7 billion in assets. So with the credit unions that I worked with, the first one was Innovation Credit Union. They're based out of Saskatchewan. They're one of the first federal credit unions in Canada, so I was around during the migration or the conversion from a provincially regulated body to a federally regulated one. So I'll talk a little bit about that. Then I went to Connexus and I stood up their data and analytics team there as well, built out a full environment and team. And then Connect First, based out of Calgary. Connexus is based out of Regina, Saskatchewan. And Connect First is based out of Calgary, so a very similar story there. Built out a data and analytics environment. They subsequently merged with Service Credit Union, and that was when I made the choice to jump over to General Bank and start with their data and analytics strategy over there. So what I'll walk you through is just data and analytics strategies overall. So we'll talk a little bit about offensive and defensive strategies. I generally bucket the data strategy or the data kind of ecosystem design into 4 phases, so I'll talk about that a little bit. We'll touch on some of the modern data environments and systems to think about. And then I'll walk through a few use cases of tying kind of the data strategy or the data ecosystem to the organization's strategy or strategic direction. So I did put a quick disclaimer at the bottom. I'm not an expert in this by any means, and my experiences are largely with credit unions and financial institutions between 4 and 7 billion. So I mean, what I say here may not be scalable to like a TD Bank, for example. So just keep that in mind. So offensive versus defensive. So this is a fairly common term. Different people define it in different ways, but fundamentally, offensive is about growth, driving revenue, that sort of thing. Innovation as well generally gets categorized into there. Defensive is preventing negative outcomes. So that's regulatory requirements, risk-based analytics or data, that sort of thing, as well as the efficiency component. So generating further efficiencies out of your data or out of your business. It's a bit of a dilemma for financial institutions because we can't really pick one or the other. Lots of banks tend to go towards the offensive, but really like a retail bank should be focused on both. And that's largely because we operate in a competitive environment, but we're also a highly regulated environment. If you look at like a hospital, highly regulated, not super competitive. You look at retailers, highly competitive, not super regulated. So we're in that kind of weird spot in the middle where we have to balance our investment between the two approaches. So I think when you're thinking about what your kind of data environment, data ecosystem, data strategy looks like is, how do you tie it to your corporate strategy? And what do you have for kind of pain points that could be resolved within the organization? And then where can you have the most impact on your strategy? So I'll talk through that a little bit later when I get through more of the use cases, but just some of the things to consider. I think the biggest thing about connecting a data environment to a strategic kind of goals or strategic direction is data. I mean, the data environment is, like using the iceberg analogy, is largely below the surface. So it's not the thing that generates, a ton of value, like visible value, I would say. It's not the sexiest thing around. It's the analytics and the visualization and the machine learning and the AI that's the cool stuff. But the data stuff is so much more and very foundational to the provision of that cool stuff. So from a data strategy point of view, these are kind of the phases that I generally use to put together the strategy or the approach to the transformation of the data environment and the building of the data environment. So I'll walk through kind of some of the examples that I've used to kind of build out data strategies for these institutions. So at Connexus, I mean, the first thing was really connecting to the overall org strategy. So sometimes it's a very direct connection within the org strategy. Sometimes it's not as direct. So this is a few years old now, but this is from Connexus's Balanced Scorecard and Strategy Map, which you can go check out on their website if you wanted to see. But fundamentally, we had to figure out a way to connect our data strategy goals to the corporate strategy overall. So what we did is we put together these perfect worlds, we called them. So they were essentially like scenarios or areas that we'd like to see invested in from a data and analytics point of view, and then we tried to map them to the goals of the organization. That way we could kind of see which ones were most directly contributing to the strategy and which ones weren't as directly contributing. But on top of that, it gave the business kind of a clearer line of sight as to what sorts of things data could do to actually support the business goals. And sometimes in the case of, I think this is a snippet from Innovation's annual or strategic plan or balanced scorecard, sometimes it's a little more direct. They put out right in their plan, they want to increase in business intelligence, they wanted to improve efficiencies and use data and become data driven and all that. So it was a lot easier of a sell because there's a more direct tie to the corporate strategic plan there. The next phase that I usually go through is a bit of an analysis phase. So from that, I usually start off with some sort of a maturity assessment. There's lots of different maturity assessments out there in the world, and they've evolved over time. The top two are TDWI. TDWI's old one is on the right, and the new one is on the left. And then the Gartner Analytics Ascendancy model has been around for a long time. The other option too is to bring your own maturity model or build your own maturity model. But really, like fundamentally, what you're trying to do is assess where are we at from a capability today and where do we want to go. So by having that in place, you can demonstrate value when you reassess a year from now or 2 years from now and see how much you've actually moved the needle from a maturity point of view. But it really gives you a sense as to where you fit. Ideally, if you can find benchmark data to benchmark yourself against your peers or against the industry, that's super helpful too, but it's not always publicly available. The next thing is really, I call it communicate the mess, but map out the environment as it stands today, and don't even worry too much about the firewalls and the servers. Just purely map out the data. I'm sure this looks familiar to many of you in terms of the legacy spaghetti that this organization had going on, but you can see there's multiple data sets, multiple applications, multiple databases, multiple reporting platforms and solutions, and everything's kind of all connected together and all over the place. So this really, an image like this does a lot for the organization to understand their kind of the mess that they're in, but also to understand how essential it is and how important it is to actually improve it. So again, a similar story here, except this organization had a data warehouse in play, but they also had multiple other repositories of data and multiple other data marts and those sorts of things. So again, just another way to kind of communicate the mess. And this one was actually from Connect First. So Connect First, they had actually gone down the path of, we're going to build out a data environment, but you can almost like see it. So you had corporate analytics, strategic insights, an IT data warehouse, and then a product data warehouse, and then a next generation kind of data warehouse. And it was like corporate analytics wanted to be the data function, and then strategic insights wanted to be the data function. And so they built their own little silos, and then you ended up with 4 or 5 different warehouses. But again, the organization didn't really think about this until they actually stood back and looked at it and thought, we're replicating the same work across multiple divisions, and we're getting inconsistent data because they're all reporting on different data sources. So super helpful to communicate the mess. Then the next thing would be around proposing. So really try to figure out, you've now got a maturity model that tells you where you are today and where you want to be in the future. Do the same thing for your data environment. Go, okay, here's where our data environment is today. This is where we want it to be in the future, and here's why. So, and talk about the key opportunities of doing this. So in this example, they wanted to kind of centralize everything into a data warehouse and then centralize everything into a single BI portal to really kind of clean up some of the mess that they had gotten themselves in. And similarly, I mean, just a different kind of data platform in the middle, but instead of a data warehouse, we're using a data lake in this example, and a smaller data warehouse, as well as some semantic layers to generate the reporting. But again, you know, fundamentally centralizing all the data to a single repository or to a single data lake or warehouse, and then reporting it out from there. And don't forget about the cultural aspirational future state. So I'm a big fan of a community of expertise. I think it helps bring your business users along on the journey. Essentially what it does is it brings a business user from each of the different divisions or departments or whatever to a centralized kind of group, and they're taught how to actually leverage the data that's being produced by the data team or by the data and analytics team, and then they're able to then go back and advocate. The approach that I always try to take is build out a centralized kind of enterprise-based reporting and then have divisional reporting. And nothing can go into the centralized reporting that's accessible by everyone unless it's been vetted by the data team. And then each of the business units have their own little reporting areas that they can then produce reporting on. And generally there's almost always a person in every business unit that has aspirations towards data or Power BI, or they're really good at visualization or whatever. So leverage that. I mean, bring them along the journey with you and get them to help you. So I think a key part of this, though, is ensuring that you articulate that as a part of the strategy, because if you don't, the business will think, oh, IT is just going to go off, build this data environment and not include us in it. So the next phase is plan. You know, I'm not a big fan of a Gantt type chart, but unfortunately almost every executive that I've presented to or worked with, they've always said, okay, well that's all well and great, but when is this going to happen? And it's a huge transformation generally. Like, you're talking about consolidating multiple systems into a single data environment, rebuilding, you know, hundreds or thousands of reports in some cases. This allows you to kind of break it down into bite-sized pieces and gives them the opportunity to reprioritize along the way if we need to kind of shift the priorities or the focus of the organization. Am I at time already? Is that right? And then the other thing it does is it really lends itself great to an agile transformation or an agile approach. So the agile approach really allows you to reprioritize things along the way, but again, still break it down into manageable chunks, and then as you kind of break it down into manageable chunks, you can reprioritize it and move those kind of the outer loops along the way. And then at the end, you should end up with once you've got through all the loops, I can guarantee they'll change a million times on the way through, you'll end up with a transformed data environment at the very end. The other thing that I get lots of pushback from the business on oftentimes is, okay, so if you take all of your resources and dedicate them to building out this new environment, what about our day-to-day asks? So if I'm able, I'll often split the team into kind of an operations group and a transformation group, and then move the resources back and forth. So that way there's always somebody there to kind of keep the lights on and deal with those requests. Meanwhile, we're building out the new environment. And I fully acknowledge that there's going to be rework at the end of it, because we'll have built things in the old environment along the way that we'll have to then add into the new environment. But unfortunately, we can't stop delivering value to the business, so we just have to keep moving forward with it. So those are kind of my 4 phases that I use to try to build out a bit of a plan around data and a plan around the data architecture and data environment. So I want to talk just a little bit about the different data system types. So traditionally you had your data warehouse, which I think everybody knows how a data warehouse works, but I mean, it takes a copy of your source systems every day, runs a transformation on them, usually on a daily basis. Sometimes it's like hourly or every couple hours or whatever, just to normalize the data and standardize it a little bit for reporting and consumption. Then a data lake came along, and then the data lake was really the concept of just dumping all the data into a single repository and instead generating the aggregations and things dynamically, because now we have cloud, and cloud can process data a lot faster. Then we ended up with a bit of a lakehouse, which is a blend of the two really, and then now we're getting more into the data fabric side of things, and then finally data streaming from a maturity point of view. I would say, from my point of view, that most of my experience has been data warehouse, data lake, data lakehouse. I haven't really got to the fabric and data streaming yet. And I think we'll get there eventually, but when I originally started doing these sorts of data strategies, I thought, okay, we either have to go data lake path or data warehouse path. But really, I think at the end of the day, we're probably going to end up with a mix of all of these because there's no taking away functionality. There's still needs. There's still a need in the business for a data warehouse oftentimes. It doesn't need to be the big behemoth that's the be-all and end-all like it used to be, but there is often still a need for certain aggregations that just can't be done or can't be done efficiently within a data lake in more of a NoSQL environment. So I think a data warehouse will always be there. There'll always be this blend of the lakehouse. And then I think eventually we will have to layer on Fabric on top of that, and we'll have to add data streaming. It's just what's holding us back from, at least from General Bank's point of view, from a data streaming is just our legacy architecture won't allow for it. Those applications just they aren't fast enough to offer data streaming at this point, but eventually we'll get there. So from a modern data environment point of view, this is kind of how I view it. So at the top, you have kind of the benefits of cloud, really, which is the decoupled and scalable architecture, as well as the cloud native and elasticity components. So really taking advantage of the fact that the cloud can scale up and scale down as needed to develop what it needs, or to produce the results it needs. And then you want to have governance and security embedded throughout, which again, most clouds have gone that path of doing that. But really, from a data point of view, from a data environment point of view, there's kind of your source data, your data platform in the middle, and then your data consumers at the end. The data platform in the middle can be, as I said, any blend of a data lake, a data warehouse, data lakehouse, whatever you want to call it. But your data sources are relatively static, I would say. However, the data platform needs to be able to handle all kinds of data sources. So it needs to be able to do everything from, capture flat files to streaming if you have applications that are streaming to structured data, unstructured data, all of that. And then from a consumption point of view, we were just talking in the room next door, from a consumption point of view, the goal is really to try to streamline the consumption layers. So we generally advocate for Power BI, but generally speaking, financial professionals prefer Excel, so we won't kind of take that away from them. But what we try to do is just allow them to connect directly to kind of the semantic layers or the system of record, as opposed to them creating their own system of record and then us running into data governance issues down the road. So this is similar to the first slide I provided, which was the offensive versus defensive, but this is really around the data investment. So where do you invest when you go to do your data and analytics kind of initiatives or projects or programs? And I believe you have to balance between the offensive and the defensive because both of them are necessary for a financial institution. And on top of that, I think you want to just keep in mind how they'll actually connect to the strategy of the organization and how they'll support the strategy of the organization. So I'll talk through kind of a couple use cases that I've been a part of in my career around how we did just that. So for this institution, their goal was really to increase their growth in their commercial portfolio. And this was kind of one of the first use cases we had provided to them to do that. What we did was we purchased a data set for the entire province of Saskatchewan of every single business in that province, and it provided a whole bunch of data on all of those businesses. So it provided things like, the owner's name, it provided things like the number of employees, estimated revenues, number of locations. It even got down to like some ethical things around race and that sort of thing, which wasn't very cool, but anyway. Then what we did is we used a model to match that data up to our existing customer database. And then we built another model that then predicted the likelihood of these businesses to become one of our customers based upon whether they shared similar attributes to our current customer base. And then we created a nice kind of UI for it so that you could actually explore and understand those customers and where they exist and where they operate. So it gave us a couple things. One, it gave us a bit of a heat map in terms of what our penetration levels look like from a commercial point of view within the different regions of Saskatchewan that we operate in. And it was interesting to find out that, if you look at this map, Regina and Saskatoon, for those of you that don't know Saskatchewan, Regina, this credit union's based in Regina, so it's very, very dark blue there, whereas in Saskatoon it's a lot lighter, yet we had been actively investing in Saskatoon. So obviously there was something wrong with that approach or that strategy. But then on top of that, it gave the end users hey, there's this business that is likely to do business with us because they're similar to our existing client base. So from a prospecting point of view, it made it a lot more effective for them. Another example was this concept of a connection score. So we built an algorithm here that Connect First's goal was, or vision was, to do what's right for every member. But we needed to ensure that we were still bringing the appropriate amount of products in the door and that customers were fully banked, so to speak. So what we did is we built out a connection score, which was essentially an algorithm that determined how connected they were to us. And it wasn't about, product pushing, or we didn't want to get into like a Wells Fargo situation where we had customers with 10 savings accounts or something like that. But what we found when we did the analysis on the actual building of the algorithm was if customers had a higher connection score with us, they had in this example, 4x more, we generated 4x more revenue from them, and their likelihood of trading from us was 27 times lower. So, and that was just by mining the data to understand, and then we actually pushed the connection score metric out to the retail teams, and they were tasked with improving the connection score of their portfolio, the average connection score, to really try to grow the business without becoming too product pushy. So it was things like set up your payroll to your deposit account, having a diverse mix of products, having a regular savings contribution, that sort of thing. Another example from Connect First, so again, to do what's right for every member, but Connect First had really gone down the path of rebranding and was really focused on growing their brand. So we wanted to do some analysis to see if that was actually providing any tangible value in the market. So we looked at all of the Net Promoter Score survey results and then compared it against the different questions and found that brand, if you look in the top there, has the highest correlation to a strong NPS score. So that allowed us to understand that the investment in brand was worth it because our customers were much more happy with us if they believed we had a good brand or the brand resonated with them. At Innovation, when we went through the federalization exercise, one of the things you have to do when you're moving from a provincially regulated to a federally regulated institution is prove to OSFI that your customer base or your membership base supports you making that change. And you can't just say, oh yeah, we got 75% of members that support that. That would be way too easy for OSFI. They've got to make it more complex. So they want you to actually show that it's representative, that it's a representative support across demographics and geographics. So this is an example of kind of how we did that. On top of that, what we did, and I've leveraged this a few times through different mergers and things like that now, but we actually went out and sampled customers to find out, or members to find out what direction they were likely to vote. And then once we knew the direction they were likely to vote, we were able to put that into a machine learning model that could then predict the likelihood of our entire membership base voting in favor or not voting in favor. So I know when I presented this slide in the past, somebody asked the question, well, isn't that kind of ethically wrong to do that? And I would argue that politicians and political parties have been doing this for decades. We just did it. We just took the same use case and applied it to a different scenario. So similar a process for mergers and that sort of thing. And this was all tied to innovation strategy at the time, was we want to be wherever you are, whenever you need us, which was kind of their rationale behind becoming federal, so they could expand outside the province, and this helped support it. Another Connexus example here. Again, you can look up the financial health indicator on Connexus's website if you're interested, but to improve the financial well-being of their members and communities was kind of their mission statement at the time. We engaged with the local university to do some research on financial health and try to figure out what actually financial health means and come up with some tangible research around that. We then translated that research into an algorithm and then built out an algorithm that would then score all of our members on their financial health score. And then our goal was then, kind of like the Connect First connection score example, try to improve that across the portfolio. So this is just the FHI score over time. You can see the different drivers around it, but it was a really interesting way to use data to support the organization's strategy of financial well-being of members. And then also interesting, I had a data scientist go on mat leave during this period, and then when she came back, she goes, we must have changed the algorithm in March of 2020. And I was like, no, that was the pandemic. Everything just stopped, but people's financial health went through the roof because nobody spent any money. This is my last example, but this is an overdraft automation process that we did at Connexus. So essentially, the way it works within the credit union space, or for most credit unions anyway, is as a customer, if you have a transaction that's going to come out of your account and you don't have enough funds, they'll allow you to go overdrawn in the account. Generally, the credit union would manually decide that. So, Matt has a insurance payment coming out of his account. I pull up Matt in the banking system. I look through all of his stuff. I go, do we think he's going to pay this back? Probably. Hit approve. I'm allowed to go negative in my account. That was a very manual process that the branches did on a daily basis, that they would spend hours going through and doing this to allow these accounts to clear. So we took that and turned that into a machine learning model, and I've got some of the details of the model itself and how we did that. But to me, the most interesting thing are these two graphs. So the top graph shows the blue is kind of how is the approval rate using the manual process that the branches did, and the green is the model. So you can see our approval rate actually went up when we implemented the model. But then even more interesting is the bottom graph, which is the delinquency rate. So the approval rate went up, the delinquency rate went down with the model. So not only does that have the value of generating efficiencies for the branches, but it also reduces risk, because now we're collecting more of the overdrafts that we provide, and it's a better member experience because Matt's overdraft got approved, whereas the branch may have not approved it before, but the machine learning model says he'll pay it back, he's good for it, let it go through. So this one kind of hit, both offensive and defensive in a few different ways. So that's kind of it for as far as my presentation goes. We have a few minutes for questions, but I think we talked about offensive and defensive. We talked about the phases to build this strategy, talked about modern data environments and systems, and talked about some use cases as well. So any questions? Hi. Is there a mic somewhere?
Thank you, Matt. Very interesting presentation. In terms of the move to federal, you said you did some samples to be able to use machine learning to project, right?
Yeah.
How did you manage selection bias?
In the samples?
Sample.
Honestly, the sample set was massive, so we didn't really have to worry too much about that. But yeah, it wasn't, when I think about it, essentially what we did was, we did your typical cross-fold validation to go back and validate against the different data sets, but it was such a massive data set, because what we actually did is any customer or member that called in, we had a quick conversation with them, and then they put it into the CRM, and then as those came in, we just withdrew them from the CRM and used them to retrain the model and constantly retrain it. So, yeah. Great question. Any others?
In your model, how you are planning to adjust the COVID-related periods data for your credit lendings or other aspects?
Sorry, can you say that again?
So in the COVID, there is a differentiation of the whatever we have. What is it? Users are not spending that much in the COVID period, right?
Yeah.
So you said that the health of the financials are going up.
Yeah.
And then it's going to come back again, right?
Yeah, totally.
So, but if you're building a model based on the last 5 years data, it might be skewed.
Yeah.
So how you're going to take care of that?
Yeah, so essentially with that, we would take a benchmark at the fiscal year end, a snapshot of the entire environment currently, all of the portfolios and the average score at that point. And then we would I wouldn't set it, but the retail leadership would figure out how much we had to improve it, and then they would go out and push towards improving it beyond what the score was. So if it came down in 1 year, for sure that would affect performance of the retail teams, but hopefully they'd be able to grow it or prevent it from declining too much. Cool. Okay, thanks everyone.
Thank you so much, Matt. It was really interesting. I appreciate the variety of examples that you presented, and I think you really demonstrated that data and analytics are not only for efficiency or risk management, but they can really create value for our customers as well as members. So thank you very much.
Awesome. Thank you.
I appreciate it.